Welcome to the Coffee Shop, everybody. This is your host, Baristo, and this is going to be a long video. I want you guys to be prepared because it is time to do the beta test release, right, of the KillZone, right, of the algo KillZone, right. You cannot get this on TradingView. I will be giving this indicator for a 30-day beta test to a certain number of people, right? Now, I know a lot of you are going to be very impatient in this video, so down below in the description, you're going to see chapters. You'll be able to go into every individual chapter and just be able to fine-tune the video into the parts where you really need to know stuff. For example, there is a very particular method you need to follow so that you can get this indicator. Not everyone will get it. You need to do certain things to be able to get this indicator. Also, there's going to be a nice lengthy breakdown of the indicator, all of its parts, right? And there's going to be within that breakdown, it's going to be, when you should be looking at really strong buys and when you should be looking at really strong sells, right? Stuff like that. So I want you to be able to watch this video in full, but I know there's going to be a lot of information that may be in here which is not relevant particularly to you as an individual. So you'll be able to fine tune, just watch the chapter that you really want to watch. And if you're still failing at it, go back and watch the whole video. Okay. So the premium KillZone, the Heiken-Ashi algo premium KillZone. Let's get into first. Let's get into what it's called, right, and then we'll talk about what is a beta test. And then we'll talk about how you get this indicator, right? This will be chapter 1, 2, 3, right? Or whatever you want to call it. Chapter 1, 2, 3. So this one is the beta test release of the Heiken-Ashi algo premium KillZone. There we go. We'll do this here, right? Because I want to call it what it is. Premium KillZone, right? There's a reason. There's a premium KillZone, okay? This indicator is a lot better than the RSI. It's even better than the V3, and it's better than the V6. So it's better than all the other indicators that I've made so far when it comes to an RSI. This one is really telling you the truth about when you're in the right movement and stuff like that. So I want to get into something real quick and just tell you what problems this solves compared to the regular RSI. And then you'll be able to understand what that is. Okay, so let's get into the first thing. We get the name. Now, let's move on to chapter 2. Ready? So chapter 2 is how do you get this indicator? You have to do 3 things, right? You got to do 3 things. I'm telling you, you're going to want to do this. Please do. All right. So 1, you need to like the video, right? You got to like the video. 2, what you need to do is you need to go down below and just comment, that you watched a particular, particular chapter, or that you're looking for a particular chapter. You may not know exactly what information you're looking for, where it is in the chapter. So comment something below and like below. You got to do that thing. You don't have to subscribe to this channel, although I very much do like when you subscribe to the channel. But the number 3 thing is follow the link below to the website, right? Discussion. There's a reason for that. In the website discussion is where you ask and ask for access. Now, you can only ask for access in the link below. Do not ask for access in the comments below because you're not going to get it, okay? You have to follow all 3 of these things. Just got to do that, right? That way I can tell the indicator to track the proper username of the person who's supposed to have it for 30 days. And every time that lapses and you want to renew it, then I'm able to track that again as long as it's in a beta test. Also in this video, I'm going to go into why is this in a beta test and why it's not a full release. Okay, so there's chapter 2. How do you get access to this indicator? You follow all 3 of these things. Okay, so let me just kind of put this up here, right? Let's go right there. And then I'm going to talk about just on this level, what are we looking for that this solves over this? This solves a lot of problems that the regular RSI and the other algos that I created, that they do not solve, right? So let's take a look first at this midline for the RSI, right? So we have this midline on the RSI where we're constantly told that anything above the midline is a bullish move and anything below the midline is a bearish move. And if you're at the line, then that's basically, you're at like zero momentum and it's like the split between the bulls and the bears. But my problem is if you're in an uptrend, this line cannot be in the middle. And if you're in a downtrend, this line cannot be in the middle. But if you're ranging, like if market is just flat, yeah, then the line can be in the middle. So the line has to be able to shift up and down, right? There must be a different level when it comes to equilibrium between the bulls and the bears. There has to be something changing there. So that's what this solves. And let me just turn a couple of things off here. We're going to shut off the candles, shut off the RSI, right? Also, with this indicator, you do get the return of the RSI Moving Average, which was missing in the V6. And so here you have the new midline, right? You got a, oh, not there. So you get a midline, which is right here, and you can see how it shifts, right? It shifts up and down, okay? It moves on its own based on who's stepped in or stepped out of the market, right? So if obviously the bulls step in, then the midline is going to, like, equilibrium needs to be higher or lower, right? And if the bears stepped in, then the equilibrium needs to be higher or lower. It depends on who stepped in and who stepped out, like a little combination of the two. So the midline, like 0 or 50, is no longer the middle. And to give you a comparison, I can show you what the common midline looks like. Let's see, here's the midline. We'll just make it white and make it nice and there, and we'll call it nice and thick, okay? Right there. And you can see where the midline was. I'm just gonna do this here. So here's the midline, right? But then here's the actual midline. Then it dips down, gets right to the same levels of midline, and it dips down below it, right? So there must be something going on here that is causing the equilibrium to drop and then the equilibrium to rise. There has to be something going on. You have to be in a downtrend, you have to be in an uptrend, and there has to be a certain amount of momentum doing that. So that's a really nice thing that you have an actual midline now instead of just a generic midline, which doesn't really help you, okay? As an example, you cross above the midline here, right? You cross above the midline. But price does not continue moving higher. It actually, this is still a pullback that's happening, and it continues lower, longer than it actually went higher. So this would have been a false move to like look for highs. You would have been caught in this wrong move. Instead, you actually want to be dipping down. So if you look at the RSI here and the candles and so on, you're going to see that you actually don't pull into this area and you start pulling back out of here. Let's see what the RSI looks like, right? Let's go in here. Show the RSI. There you go. Turn on, right? So the RSI stays inside of this range area, just barely touches this. You don't cross into a strong bullish area. You actually pull back down and continue this downtrend. You had a downtrend, you pulled back, you continued the downtrend. So this is a good job of telling you that you're still in a ranging market and that you are in a pullback to continue a downtrend. And I'll show you what that's like later on in the video, right? So there's the midline. Let's move on to the zones themselves, okay? So in the regular RSI, you've got this range here, which is the, what is that? The 30 to the 70 range, right? 30 to 70. In my algos, that would be from 20 to 20 or 10 to 10. This would be ranging market. So basically it's saying that all of this is ranging market, which I don't necessarily believe that either, okay? That can't be. It can't be, because if you look at price, it's actually in a downtrend, right? And then again, later on, it's in a nice uptrend over here. And the RSI is just showing you that it's above average, but it's still inside of the range. So that's not really, you know, it's not accurate. So the point is, when the RSI is at 0, let's say, or at the midline, the further away you are from the midline in a particular direction, you are ranging until you cross some threshold, okay? Until you cross some threshold. And then you are in a strong long trend, or you cross a threshold down here and you're in a strong downtrend. Now, just like the midline shifts, it must shift up and down. So does the thresholds above and below, right? So let's take a look at this. All right, just take a look close up at this thing. And you can see how your midline is obviously shifting. The RSI is moving through it. And this area is your strong bullish area. When you cross into this area, you have very strong trend. But you still need to know your price action. Are you in an uptrend or are you in a downtrend? In this particular case on the chart, we already saw we were in a downtrend. So this is just pulling back and we want to cross down into the downtrend. You want to continue the downtrend, right? So when you cross down here, this is when you would start entering your nice super, you would really enter confidently into your short trades. And that would happen as you cross this level. Not crossing below zero, but this is where the trend really takes off. This is just still ranging over here. So let's take a look at the market, see what it does here, right? And that's at this point in time, you cross below the strong bearish threshold, right? And you're pulling up, and what you have is a change of character in this point. There's a change of character taking place. Close of this candle completes the change of character, and all the way through this level, right, through this price action, you stay in this strong trend, right? At this point, you can see that this range gets smaller, right? Got smaller, which means the sellers stepped out. Imagine a bunch of people standing in a room. You have sellers and you have buyers, okay? If there's a bunch of people in the room gets bigger. If there's a bunch of people stepping out of the room gets smaller, right? So this range was nice and big because the sellers stepped in, and then the RSI crossed into that level. Then the sellers stepped out and the RSI crossed above that level, which means the sellers stepped out and momentum shifted back into a ranging market. So right here, you should have a ranging market, right? This also means that here, you see how this area was large here. Buyers had stepped in. They stepped out at this point, right? Smaller area, okay? They stepped out. And when the momentum came back into this area, you don't have a long because the buyers, they didn't step back in yet. Your sellers stepped out, which stops the market from falling. But the buyers didn't step in to push the market up, right? So if you take a look at price, right, comes down, sellers step out, which means the market stops falling, right? You get this little retrace. And since the buyers did not step in, right, you still have this downward range taking place until you get a strong trend and, the sellers step in again or whatever the case may be. So you can analyze this. It's very easy to understand. But what I want you to very much understand is what are these four zones? You got the bullish range, the bearish range. So when the RSI is up here in this area, you are ranging bullish. When it's here, you're ranging bearish, okay? And when it crosses down here, according to your price action to the overall trend, you have a strong trend in this direction to the shorts, or you have a strong trend in this direction to the longs, right? So this is doing a really good job of showing you, where is that threshold away from the midline that you need to cross to get into your trend, right? To get back into your trend. You need to know what is your trend, okay? So next up, what else do we have here? You can notice that the RSI has two colors to it, a bullish and bearish color. This is something that I introduced along with the RSI pivots in the V3, okay? And as an example, the bullish and bearish, you kind of look at them backwards, right? If you have a bearish color on a bullish RSI, then you have a pullback. If you have a bullish color on a bearish RSI, you have a pullback, right? So that would be explained like this, right? Here's the midline. Here's the RSI above it. RSI above the midline would be a bullish RSI because you're on the bullish side. You're in this bullish range. You're in this bullish trend, right? But you see how the RSI changes colors right here. This is a pullback. It's not a short. So just because the RSI makes a lower high, right, and starts falling and breaks its own low, you are not in a downtrend. This is simply a pullback. Moves up again, and it's still on the bullish side. You can mark these candles as pullbacks, okay? And then this is good for like pullback traders. Some people like doing pullback trades, right? And then it's on the bullish side again, and all the way to here, it's a pullback, which finally continues and starts pushing short, okay? So depending on your trend, if you had a downtrend, let's say you had a downtrend on price, okay? So then you finally have this pullback into your downtrend that's taking place. Let's say you had an uptrend in your price, right? Your RSI is pulling back. You want to wait until it switches and starts making long moves again so you can trade back to wherever support and resistance is, which is probably right here on price, right? and you end up getting back into your long position just long enough for, another couple of pips, whatever the case may be. So again, what you're looking for is the opposite color on the wrong side of the oscillator. So if you got a bearish color on the top, right, then you have a pullback. If you have a bullish color on the bottom, you have a pullback. It had a downtrend doing a pullback, right? And you just want to make sure that that leg is a little bit short, and you develop your own price action strategies for that one, okay? I'm going to go into the settings and describe all those things in just a second, right? But based on the visual stuff, here's everything, right? And you can adjust the colors for this range, for this area. You can adjust this area color separately. All four of these zones, you can adjust the color, and you can adjust the color for this, as well as changing the colors for both the bullish and bearish side of the RSI. Now, the other thing you could do is you can go and put on the, You can go and put on the RSI Moving Average, right? Where you can change its length and its type from SMA, EMA, regressive, volume-weighted moving average, and a couple of more, right? And this does the same thing the RSI does, but they do not match colors, okay? This is giving you the average of the RSI and letting you know when it's doing a pullback. So the same rule applies. This is telling you that the average price of the RSI is pulling back. Why? Because it's on the bullish side and it's pulling down with a bearish color, okay? There are times when the RSI is moving down, right? But it's still a bullish color. That means you don't have a pullback yet. Your pullback doesn't start until this point, and it ends at this point. So you could literally go and mark your candles from the close to the close, the average close to the average close, right? Let's say you put a 14-period smooth moving average on your chart, because this is a smooth moving average. You can put a 14-period moving average and find that average and mark the closing price of the average to the closing price of the average, not the candles, and say, here's the average close in the pullback, right? You do that on your chart, all right? So that's everything about the visuals. There's also the liquidity ribbon. Let's see, put the ribbon back on here. So the liquidity ribbon is also in this one, which is a nice tool that was introduced in the V3 model, right? Really cool. And this works like a stochastic. Okay, that's how it's working. It's how it worked on the last one. And what you're doing is basically when it's in the same aligned movement as your RSI and your price action, then yes, you are back into that trend. That's what's happening there. You don't care that the RSI is touching the stochastic. It has the ribbon. It has nothing to do with touching the ribbon, okay? It's a completely separate calculation. You simply want to know, right? So for example, your RSI dips down at this point, dips down below this threshold, right? And at the same time, you have a nice solid resistance taking place, and you are losing support. So you know that this is a good move to the downside. As an example to know that this would have been a bad move to the downside here, look what's happening. You've got nice solid support, right? Nice solid green level. The RSI is pulling down, and this is your midline. So the RSI pulled down below the midline. People would start going short, and then it would get stopped out as price moves back long because they got in too early. Now that you are getting a solid resistance and losing support as it pulls down, this is where you would have started your entry, not back here. So it stops you from getting into your trade too early. And it also tells you, right, when you are starting to lose the momentum. See how it shifts back outside of this zone? Okay. The RSI shifts back to outside of this bearish zone, and you are gaining support, right? You're gaining support here. Okay. It's not out above the midline yet. So you're just saying, okay, I'm not going to take any more shorts yet until something else happens. Okay. So there's your ribbon. The ribbon is reintroduced. You can develop your own strategies for it, and we can also talk about those over on the website, which is the link below now. Let's get into, let's just run down the settings real quick, right? Let's do that. So your Heiken-Ashi candles are still here, right? There will be a standard in every RSI that I create. I am using my customized colors for them. And you can change the colors. The custom colors have nothing to do with these, okay? They have everything to do with the movement and closing price of the candles. For example, on a regular pair of Heiken-Ashi candles, you would assume that this is a long move, but it is not. This is just a pullback. So if you use my custom color setup, okay, then you'll see that you are still in a downtrend all the way through to here, still in a downtrend, right? And then you continue a downtrend at this point. So depending on where your RSI is, where your price action is and stuff like that, are you hitting resistance? I would say you're hitting resistance over here. You can actually get back into your shorts from a nice high value, right? And get down to a lower price. So you can sell higher and buy back lower, or you could just follow the scalp all the way down, right? So your candles are still back in there. I'm going to shut those off, a little bit less to see. Your RSI tracking, you'll see that when you turn it on, you'll know exactly what it is. You can change the RSI thickness, right? Change it to 1 or 2 for the thickness. Your RSI moving average, which you can set to different types, EMA, SMA, WMA, VWMA, regressive, right? This area here, I want to be very clear about this, okay? Liquidity support and resistance. This is why this is still a beta test indicator. And I want to be very clear about this. Do not, I'm sorry, this is liquidity ribbon. The liquidity levels, all right, sorry about that. Liquidity levels, show liquidity levels. You can turn them on and look at them, but the calculation for these is not complete, okay? It's showing them, but they're not where I want them to be yet in the calculation. I want them to be a little bit more finite, a little bit more user-friendly, and they're not. Also, I need to be able to tell you guys how to use them. So this whole liquidity levels, label style, RSI, SMC, you are not going to be using any of this. Do not use any of this. You can go and fiddle with the colors and the numbers all you want, but you are not going to have this turned on. You don't need to. I just didn't want to turn it off and make like a whole different version. I'm going to continue calculating this during the beta test. And once I'm finished with this, it will be a full public release and this will still be included. Then I'll show you how to find this because the RSI is showing you where liquidity is created and removed from the market in very short term, right? So it's a very cool thing to do. So this will be the first time that I see this. It will be Smart Money Concepts on the RSI. No one else is doing this thing. And hopefully I can release this before anybody steals this idea. So make sure liquidity levels is turned off. Do not worry about any of that. Now, KillZone settings. Here's what you need to know. Let's say you're at the standard level of the KillZone settings, right? You set it for 50, which is the standard, okay? I'll do this right here. And then I can go back and I can find an area on the chart where obviously you see how you have this. Oh, wait, sorry. I'm looking for an area on the chart. Yeah, there's an overlap right here, okay? So there's a little overlap that takes place. You have the bullish trending zone, RSI is inside of it, and it slips out, goes into the bearish trending zone, and now it's inside of both. It cannot be inside of both. It does not work that way. Price action and movement and momentum, they do not work that way. When you see this overlap taking place, okay, that means you are looking at something in a very, very sensitive manner. You could be on a really low time frame looking at really high sensitivity. Lower time frames have a lot more noise and activity that is kind of useless on the chart, right? That being said, if you're using an indicator that is way too sensitive on a really low time frame, you're looking at something like a giant microscope. You don't need that. So what you do with the sensitivity, when you get stuff that's overlapping or like really, really tight ranges in there, like there's no room for any kind of movement. What you do is you go to your sensitivity, okay? Go down to the sensitivity and just turn it down, right? I like to go down to like a 15 or a 20 on most times. That's usually what I like to use, right? You go down to a 15 and you don't have to use a 15. It depends on the market that you're looking at. I'm looking at gold USD, right? On OANDA, I think it is. And you see how the overlap just automatically disappears. And if I zoom out, I don't have any more overlaps taking place. But if I went and set this for 50 and left it there, which is the highest value it will take, okay? If I set it to do that, then you have that overlap taking place over here, and you probably have another overlap taking place elsewhere at the same time of day, like right here. So there's another overlap taking place right there. You don't want that, okay? You need to allow room for movement. So there's what the sensitivity setting is for. Let's remove that, get down to something reasonable, go to 20, right? Now, Let's shut off the RSI just so I can show you a couple of things, right? RSI is off. Now, for the people who use different types of colors, or sometimes they don't care which way the market has moved. Let's bring this down even further because I see an overlap right there. So I think I need to tell you real quick about why this has two different colors, right? And I'll tell you that and this. So first of all, we'll start with the midline here, right? So you see how this is set for white. Use single color for the trending levels and for the ranging market, right? So I want to talk about the point of control, but I'm not going to do that. So use single color for the trending levels. These areas, these big areas here are the trending levels. When your RSI enters this area, this is where price is trending in that direction. When it's not in that area, it's ranging in that direction, right? So these colors tell you whether buyers or sellers stepped in or stepped out, right? So if you have a red area with a red colored line, that means the sellers stepped in. If you have a green area with a green color, the buyers stepped in. So you have more buyers. If you have an area with an opposing color, right? If you have an area with an opposing color, then that means the sellers, in this case, they stepped out. The last thing they did was they stepped out. You just can't see it because it's way back there on your chart. And the same thing here for the sellers stepped out. It doesn't mean the buyers stepped in. And over here, the buyers previously stepped out, okay? It doesn't mean that the sellers stepped in, okay? So the opposite color simply means the zone got smaller. That's what's happening here. So you see how it's red, the zone changes, it's still red, zone changes, it's still red. Each time it got smaller, but then it got larger, right? And it changed to green, immediately went back. It got larger, like you have buyers stepping in, and it changed to green, okay? And the same thing here. Sellers at this point stepped out of the market. They don't want to sell anymore. So there's less sellers in the market, okay? And that means you have less chance for shorts at this point. Now we should be able to see somewhere between these two that the RSI starts climbing, right? And starts hitting this trending area or running through the range. So let's put on the RSI and just take a look at what that looks like, right? So RSI Moving Average and show the RSI right here. Where's the RSI? Come on, load up. Where's my RSI? There we go. So you can see here, right? I'll just kind of move it this way. You see that the sellers, that the buyers stepped in at this point and the sellers stepped out at this point. The RSI starts moving up and starts going long through this range, right? And keeps trying to go long until it reaches this trending area, okay? And you see what happens at that point, right? You start getting this ranging uptrend till you get a strong uptrend, right? So let's put this back on here. Put the setting here. So the colors simply mean who stepped in and who stepped out. You don't have to be able to see that all the way to the left on your chart, right? Now you can just use a single color for that if you only want to just plot those levels. I want you to understand something very clearly. Those levels are not pivots. So before anybody comes back and says they're pivot levels, they are not. They have nothing to do with the placement of the RSI, zero. Because if they did, when I turn off the RSI, they would disappear, right? Also, you could tell that these are not pivots in the RSI. That'd be kind of crazy. So anyway, you could set it for a single color if you just want to see the levels. I like having the colors because I want to know who stepped in and stepped out. Also, this ranging area, right? Maybe too many colors on your chart. So you can set this to a single color. That way you know when the RSI is inside that range, you probably don't want to range trade, right? And just kind of do this to it, bring it down even further. Let's bring it down to like 6 on my chart. There we go. Just make it a little bit more translucent or even a little bit more like that. There we go. So when the RSI is inside this area, I don't really care about it. I want to trade when it's trending, right? I may have a specific strategy for that. And then everything below here is simply going to be about the colors of the backgrounds that are in here. So these are all the functions of this particular indicator, right? In the style tab, you're not really going to be changing any of these. You're not going to do anything here, okay? The RSI, the labels, you want to leave, everything that's here on the style tab, just leave it on. Just don't worry about it, okay? If you ever mess up the settings in the indicator, just go back to reset to the defaults, okay? 9 out of 10, you're going to be using the defaults, but you may adjust some things. Just reset the defaults. It'll go back to here, right? Don't ask me which settings I use. I just showed you. And I like things at the default because it was designed this way. Now, what time frame can you use this chart on, right? These settings on. I've been able to use this on the 30-minute, the 15-minute, the 5-minute, 3-minute, 2-minute, 1-minute, and all the way down into the seconds chart, all the way down to a 10-second chart, okay? Using the default settings, right? Now, that's because of the strategies I use. You may have another strategy you use, so you would refine the settings. Now, of course, this is not a standalone indicator, okay? You can use it as a standalone if you want to be able to scalp and use the Heiken-Ashi Candles. However, I would highly implore you to add the stochastic or the stochastic RSI or the Stochashi or another momentum indicator that gives you some really, really fine-tuned movements, because the RSI is basically telling you when you should be looking at strong longs, weak shorts, or strong shorts. And obviously it's going to move a little bit while it's in there. So if you have something that dials down into the finite movements, then you know a pullback is just a pullback, and it starts to curve away and starts going down again. So this is a really cool indicator. I really like this one. And again, if you want to get the access to this indicator, you follow the 3 steps. Okay. Let's kind of pull this up here. And that is the difference between this and the common RSI. So let's get rid of the common RSI right there. And if I just kind of zoom out and show you like what's going on here, you'll be able to see like every time that this moves into the trending areas, that's when price really starts moving in that direction. So now you finally have a threshold, and you can see where it is that price action needs to cross, right? This does not repaint, okay? You can see where price action and your RSI momentum need to cross so you can actually get further into that move. And you can see you're kind of stuck in this range here, so you're just range trading. Rule of thumb, ranges are your friends. I'm just a quick little thing here. You had a range, you came into the range here, and you exited the range here, right? The reason I say you came in here is because you had a high and a lower high. You exit the range, you had a low and a higher low, okay? So I'm going to say from this price, okay, from that price, roughly the high, I'm going to find the high over there, to the low over here, right? So you had a low of the range, which is there, and the high of the range over here, okay? That means this is just ranging market. When price action gets back to this level again later on, 9 times out of 10, it is going to be a range where price wants to sit. So you can see that that range comes up, it's retested, and it's from the top, and then it's retested from the bottom, and again, retested from the top and the bottom, again, over and over again. So it's good to find these ranges, you know. Entering a range here, you exit the range there, but you don't get the right kind of movement, right? You re-enter the range, and then you get the movement again. So you came in from the bottom, you left through the top, right? Or you could come in from the top and leave through the bottom. You want to just kind of cross both ways, right? So this one came in from the top. I'm taking it from down here. So you got this, right? And we're going to take this. Where's the last low? Right over here. I'm sorry, the high part from here is going to be the highest part is there, right? And we can take a look at this later on and see that price action bounces off of the bottom of this, okay? Enters into the longer part of the range and brings it right back to the top of that same range, okay? So that's how ranges could really help you out. And again, you could dial in different times a day and change the sensitivity if your ranges are like way too wide, like ranges get really wide and it's showing that there's no support and no resistance, but you know that price action is kind of moving, then you could actually take your sensitivity, right, and just kind of turn it up a little bit. Let's bring it back to 20 right there. Take a look at this area here. You can see when you are, still no support and resistance, right? You're getting resistance, you're hitting that low level and you're pulling into that bearish trending area, and again, a little bit into the bullish side, but you have, indicatively, you have a high, lower highs, right? Lower highs and lower lows. So you're not looking at this for a breakout to the long. You want to catch the short move, okay? So you still need to know a little bit something about price action. Now, again, I urge you guys, okay? This is the beta test release. If you follow these 3 steps, you will have it on your chart as an invite-only script for 30 days. After the 30 days, it falls off. You should take part in the discussion about this in the website. Talk about it, right? Let me know where it could be better. Let me know if any of the settings are not working for you. Let me know if there's something else that you're looking for, or you could just come through and say, hey, this works great. Here's the strategy that I use. Here's another indicator that I use with it, okay? Give us some ideas. It's really good to have these things, okay? All right, peeps, so that's it. That's everything about the indicator. Again, follow these 3 steps, and I will send you directly a link to get the indicator. And trust me, don't try sharing that link because it won't work for other people. Gotcha. All right. So that's the Heiken-Ashi Premium KillZone Beta. Let's get into it. Get down below and start liking this video. Do the thing. I'll see you soon. Peace out.